Good morning from the Second Age of Reason. We're here today to talk about the European financial dilemma. They are close to having the euro go under. They are close to having the nations separate back off and generate their own currencies like Deutschmarks or whatever you want. And those that want to have a unified Europe are kind of shivering in their boots because it's all falling apart now. And they're wondering why. And I know the reason. Because they have privatized money. Some people say, well, if you have government-issued, public option money, the government can print as much as they want. And that's like fiat currency. The government can also issue money of value, saying that this note is redeemable for so much in whatever commodity from the United States government. That's an option as well. But in Europe, they have this fiat money scheme going on. And since the money is not public, it's privatized. It's issued by the ECB and the IMF and whatever. They issue the money. And so it's then under control of private banks. Another source of money issuance is bank loans. And so what happens is banks make a loan and produce debt, and that debt they put on their books as an asset, which allows them to say that we have that much in reserves or value or whatever. But it's not real. It's only a debt that may be paid someday that acts as if it's an asset. But it's still actually, in reality, since it's not paid in yet, it's still a debt. And that sort of thing is equivalent of having the banks print their own money. Now, if the bank made loans that were limited to actual deposits, then that would be more realistic. They could do all that. But since they are essentially creating this money out of nowhere in a computer and it's all electronics, there's no cash going back and forth, you've essentially let private banks issue money, and they're probably issuing more money than if the government had controlled the banks and printed it off their own government-run printing presses. So they need to look at the idea of nationalizing the money, so the money is from the United States of Europe, so that they issue the money for the European Union, and then they issue grants to the various member states and say, here's what you get for the grant from the Central European Bank, which is controlled by the government, not by private banks. And then the rest of the money comes from taxation of the residents if they want to do that sort of thing. Because technically, they don't even need to do that. They can just issue money. And the issuance of money is limited by inflation. So that explains that. So if Europe would nationalize the money supply and limit it, debt to the amount of money actually on deposits, so that they'll take a deposit and pay 2% interest on deposit, and they'll make loans out, and then the interest on the loans could be 6 or 10% or something, and then that would produce revenue. But that is usually not enough to satisfy their insatiable greed. So that's where the problem comes in, and why they have to produce money that they don't even have on deposits. So I thought I'd mention that. And if they nationalize their money, and they can issue it at will, and just tell the banks, well, listen, here's the rules, they might be able to salvage it. But otherwise, yep, they're all washed up. And bye-bye. Until later, we'll be seeing you.